Well, let's take an overall look at the consumer sector in India as of the third quarter and as of December itself. And the one word that stands out for me is schism. Wondering what this exotic word means? Well, it means a split or a division between strongly opposed sections or parties caused by differences in opinion or belief. This split is quite stark among companies, categories, sectors, consumers and analysts, as well as the stock prices. So let's take a look at all of these or each of these schisms. The first one is in the leaders and laggards in the consumer staples space. The ones that did well, you had Honasa, 28% higher, much higher than the industry growth. Varun Beverages doing well, Tata Consumer, GCPL, Nestle, and even ITC. The ones which are, discretionary, urban and mass premium doing extremely well. But when it comes to the staples, HUL, 0.3% decline in revenues, Marico, 3.1% decline in revenues. Dabur, while it did better than these four, of course, was lower than the industry itself, telling you that demand at rural and mass level was struggling. Speaking about the retail segment, the schism was, of course, Trent, there was Daylight, and then there were the others. 50% growth led usually by the Zudio business and the store expansion that the company's been on. If you talk about the paint sector, which everyone's speaking about right now, saw growth on a smaller base for some companies like Indigo Paints. For the last few quarters, it's been growing faster than the industry. But the larger companies which have deeper penetration did face some demand slowdown and price corrections because of this demand slowdown and raw material correction as well. There was no weakness in sentiment whatsoever for the jewellery space. All players saw stellar growths in the third quarter, right from a national player to, a south-focused player to an east-focused player to a Tamil Nadu-focused player itself, all of them growing between 20 and 35%. And when you talk about the quick service restaurant space, the category that stood out was chicken sandwiches. KFC, which is, run by both Sapphire Foods and Devyani, saw 6.6% growth and 11.6% growth. Pizza Hut not doing well for them. Domino's did not do well for them either. Westlife Food was impacted by floods in South. But for Jubilant Foods itself, the things that did well was Popeyes. Again, chicken sandwich doing a lot better for them as a category. Everyone traveled in the third quarter and the dream run for travel and leisure continues, and more so at the higher end. Indian Hotels, the best ever quarter for the company. ITC Hotels, the best ever quarter for the company. All these companies reporting their best ever performances. What are the key words that stood out from the management commentary in the third quarter? Let's take a look at each of them. Challenging environment, weakness in mass consumption, premium products growing well, to invest in brand building and ad spends. What are the other things that they said? They expect gradual recovery, a benign raw material environment. What do both of these things mean? Increasing competitive intensity. So what are the trends that I'm looking at going forward in this environment? Supply chain efficiencies through digital, that's what the companies are doing. They're doing some category growth activities itself. Innovations in mass and premium products, because premium's doing well, mass is struggling, so maybe some innovation there could do well. And a lot of these companies have made some acquisitions, so scaling of those M&A assets would be things that I'll be watching out for as well. And in the final schism, the stock markets. Companies which have staples and rural focused businesses have not done well in the last 12 months. And if you look at the others, luxury, urban discretionary, and some incredible value retailers like Trent, big movers. You have a near 200% gain for Trent and Kalyan Jewellers up to 40%.